All right. Good morning, everybody. Here we are again. I want to thank everyone for joining the webinar this morning. Again, my name is Jason Flint, and I am the Director of HR Client Services for Prestige Employee Administrators. Along with me this morning again is Carol Sawyer, who is our Tax Manager, also here at Prestige. So clearly, a lot's transpired over the last week since our last webinar. The webinar this morning is going to primarily revolve around some of the updates regarding the CARES Act that Carol went through last week, as well as providing some details around the SBA Paycheck Protection Program and the loan process that's involved with that program. From there, we will go through many of the questions that came through the chat function during last week's webinar, as well as some other information that we feel is relevant as the time has passed from last week's to this. Just as a reminder, all participants will be muted throughout the webinar this morning. However, if you do have a question, I urge you to use the Q&A, the question and answer feature within the webinar, and please direct your question to the panelists. We will do our best to answer all of the incoming questions. At this point, I'd like to introduce Carol Sawyer, who will kick things off from here and get into some updates regarding the CARES Act. So, take it away, Carol.
All right. Thank you very much for joining us again today. We're here for you. We're staying up on all of the regulations and processing and having new procedures so that at least payroll-wise, you're all able to handle our new economic reality. So the first thing I want to talk about, this is you can go to the next slide.
All right.
There we go. My apologies. All right. So this is information we didn't have for you last week, which are these specific pay codes that are in PRISM for the different types of emergency paid leave and emergency paid family leave set up by the FFCRA. We tried to name them to be fairly self-explanatory. COVID self is to be used when the employee is the one who is sick, is showing symptoms and is seeking a diagnosis, or has been told by a doctor or some other agency that you need to isolate or quarantine. So that is the emergency paid sick leave for when the individual is sick. The emergency paid sick leave for when you're caring for a dependent is the COVID DEP code. So you're caring for a loved one or a family member that is under isolation or quarantine, or you're the parent of a child whose school or daycare has been closed. For parents of children whose daycare or school has been closed, can then continue into the COVID FMLA, which is the 10-week coverage for that issue. I can tell you, we have successfully processed payrolls using these pay codes, and it does flow through. When you see your invoice, there will be line items at the bottom that says FFCRA tax wage credit and FFCRA Medicare tax credit. These wages are exempt from the employer FICA, so that is taken out. They did an odd thing with Medicare. These wages are subject to Medicare, but then you get a tax credit of that amount, and then you get the wage tax credit amount. So that is how it will appear on your invoice should you need to use these pay codes. The CARES Act, there's three parts to it. There is the Paycheck Protection Program loan, which we are going to spend all of our time on today because that is the one aspect that needs to be dealt with now as you're all dealing with your loan applications and things. I will remind you that as we move forward in the coming weeks, there is the Employee Retention Tax Credit that we explained and the FICA tax deferral. The ability to use those two items are affected by whether you, A, get the loan or you get forgiveness on the loan. And there is no mechanism in our system yet to actually process those for the few clients that have said we're not applying for loans. We're waiting for our software provider to get ramped up on this. And as soon as we have that in place, those of you who have already communicated to us that you would like to participate, we will get that underway. The SBA has been providing updates on an almost daily basis we prepared this slide yesterday. I can tell you that the updates we are giving you do reflect the SBA released updates as of 4/7. There was a separate set that came out late yesterday. We have reviewed that. All of the information contained in here is good. So what were the important parts of that update? Well, the number one was the SBA giving language to both our clients and all of the banks and lenders to explain the relationship between you, our clients, and the PEO reporting of the wages, because there are no 941s, 940s, not even W-2s. The W-2s also say prestige on them, and that the bank is allowed to accept a statement from the PEO with the amount of wages reported on it as proof of payroll for applying for this loan. We have sent out to all of you our SBA loan calculation report, which has our name on it, and there's also the client allocation report, which comes out of Prestige Pro, that take care of both of these requirements. The second update that changed, and there were various determinations during the week last week of what time period to calculate the average monthly payroll. It was originally clearly said to be 2019, with exceptions for seasonal businesses. They have now said it can be either calendar year 2019 or the most recent 12 months. So if you received the report last week for 2019 and you would like to have the report for the rolling 12 months ending March 31st, 2020, please contact your payroll specialist and we can get that out to you. That is the only secondary time period. We are not running any other dates other than 2019 or the 12 months ending March 31st, 2020. Independent contractors were another gray area in the original interpretation of the legislation. SBA has made it clear you may not include those costs in calculating your monthly average payroll cost. There was also some confusion regarding the $100,000 cap. Was it a cap on total compensation at $100,000, or was it just the salary portion? The SBA has now confirmed that the only part that is capped is the salary part of the calculation. So it can be $100,000 in wages, plus the benefits, plus the 401k match, plus the state and local taxes. Our report, we did send out a second report on Friday for those who had requested our original report, that we had put the cap at the aggregate level for all of the compensation. So we jumped on this as soon as that became a new interpretation. So going forward, all of our reports will have just the salary capped at $100,000. The next thing I enjoyed reading is the fact that the SBA has specifically told the lenders and the banks, you do not need to replicate the borrower's calculation. Our report is very nice because it has columns for each of the different types of things that can be included. There's no additional proof that is needed. When you, the borrower, sign your application, you're attesting to this being accurate information, and the SBA has said to the banks and the lenders, that is enough. You don't need anything more. The last thing, which actually was very confusing, we didn't here at Prestige did not find it confusing, but there was some other companies, other firms interpreting that the FICA and Medicare on the wages could be included in this calculation. The SBA has now clearly said no. Here at Prestige, we never did include it. We felt reasonable of our interpretation of the legislation, so this is not an issue for any of our clients because we never included it. So, just to give you an idea of what's to come, you've applied for the loan, you've gotten your funding, what's next? Well, the clock starts ticking. The next 8 weeks are what are referred to as your covered period. And to apply for loan forgiveness, you will need to, at the end of your covered period, end of your 8 weeks, document how this money was spent. We have received clarification that of that loan amount, only 25% can be used for non-payroll costs. The rent, the utilities, the interest on your other debts that you have, that will be capped at 25%. And then the remaining needs to be spent on salaries, benefits, state and local taxes. Those exactly what you based your loan amount on. Two other things to consider as you will be applying for your forgiveness is your head count. So your 8-week covered period, you will be taking the head count for that 8 weeks and comparing it to the same 8 weeks in the prior year. And then there's also a reduction if you've reduced the salary for a single employee. So those are the things that you need to be cognizant of in your 8 weeks of the covered period as you spend this loan. Now, it's very possible that for some of you, not all of this loan will be forgiven. And that's okay. It turns into a very affordable 2-year loan at 1% interest. So that is the loan you will end up, there was a lot of different information in the past. Was it 2 years, 10 years, 4%, 0.5%? This is what it will be. It will be a 2-year loan at just 1%. There's lots of questions, and so we're going to cover a few of those for you today. So my first question that I'm sure you're all asking is, wait a minute, I applied for my loan using the 2019 report you gave me, which was the regulation at the time. What are my options now? The 12-month ending March 31st is better for me. What do I do? Yes, speak to your lender. We have been told by the SBA that the banks and lenders have latitude to change the loan amount in the loan application prior to disbursement. They are going through their own process because after you file with the bank also then has to file with SBA. So there is time to change that loan amount. So contact your payroll rep if you would like to see that report. Are owner wages included? Yes. Anything that is reported on a W-2 by your company is included in the calculation for average monthly cost. It becomes a little more complicated with are amounts on K-1s included? Well, that depends. If we're talking about the owner of an S-Corp, it got a W-2, as we just mentioned in the last question, the amounts on the K-1 represent profits, and those are not to be included in any way in this calculation. But there are partners and members of LLCs that are taxed as a partnership that all of their compensation is reported on a K-1. Typically, you'll have an amount in guaranteed payments, and then there's also a self-employment income. There is no definitive guidance yet on if that guaranteed payments amount can be included in the average monthly wage cost calculation. We have not included it for any of our firms like this that have requested our report. Once again, these loan applications are to your discretion. We provide you with the report based on our interpretation of the regulations, and so we've not included the K-1s. That's all right. And I'm going to cover this one again because we've kind of talked about it, but it's a difficult question because the banks are really pushing. I've had many clients come to me. My bank says I have to have a 941. And while we don't want to tell banks they're wrong, that's not correct. Here we go. I wanted to see the answer. You don't receive a 941. All the 941s have our tax ID number and the information for all of our clients. So we've done a couple of things. One, you've got the PEO certification letter that we've distributed that explains the relationship. The client allocation report has the same basic information. And the other thing I've started providing to the clients that have asked of me, and anybody else that asks can get it as well, is a copy of this Q&A that we have based these information off of that the SBA and the Treasury Department released last night. It's an official document from the SBA that we can send to you to also give to your bank to say, look, this is what the SBA is saying. Can we work this out? Because we want you to get the loan that you need. Next question. Our 401k is not with Prestige. Should I add in the 401k match? Absolutely. Our report is only including the information in our system. If you have an outside 401k, you can add that benefit to the calculation and to arrive at your new average monthly cost. Another great question. I laid off all my employees. Can I apply for the loan and rehire them? Absolutely. This is actually the intent of the legislation by the federal government to get people receiving paychecks to pay their rent, to pay their utilities, and to buy their food. As soon as you receive those loan proceeds, pull everybody back for unemployment, end their furlough, end their layoff, and get them back to work because you have the funds to pay them. And is loan forgiveness guaranteed to companies who continue business as usual with no layoffs? We've given you the criteria that the loan forgiveness is based on. 25% has to be, that is the max for non-payroll related. You have headcount issues, and you have compensation for each individual employee to be considered. There are no guarantees in life. So that'll answer that. We'll leave that alone from there. Do 401k rules apply to IRAs as well? Yes, they do. The terminology I should have used in our prior webinar should have been qualified retirement plans. So those would be 401ks, IRAs, profit-sharing plans. Those emergency distributions that we outlined in the last webinar can be taken from all of those different products. Is the required minimum distribution waiver at the employee's discretion? Absolutely. If you're able to make it through the year and not take your required minimum distribution from your qualified retirement plan, then don't do it. The federal government doesn't want you liquidating assets at a market low at the moment just to fulfill that requirement. Moving on to unemployment, as that was included in the CARES Act and is forefront in everybody's mind. Is there a one-week waiting period in New York? I am concentrating on New York because that's the state we are in and the majority of our clients are. New York is one of the states that typically does have a one-week waiting period, but as a result of the CARES Act has waived that one-week period. Federal government is funding that to all of the states who waive that one-week waiting period. How fast can people get on unemployment, and is it retroactive? Absolutely, yes, it is retroactive. The speed with which you can get on unemployment, it depends on the state and what the state has been able to do in order to ramp up their response. I know in New York, they've now set different days of the week, depending on the first letter of your last name. That indicates what day you should try and call. So not everybody is trying to call because as much as you apply online, depending on your specific situation, there is a phone call follow-up that has to be done. Whenever you are approved for unemployment, your payments will be backdated from your date of layoff, termination, whatever it may have been. Who qualifies for unemployment insurance? As we mentioned in last week's webinar, a lot of people who don't normally qualify for unemployment will qualify under the extensions granted in the CARES Act. And it's pretty much any individual whose ability to work has been affected by COVID-19, whether their work has been shut down, they're caring for someone, all of those different possibilities. It is a two-step process, I just recently learned, in the state of New York. You have to apply for the traditional unemployment insurance if you're self-employed. You apply for unemployment, you get denied, then it follows right up after that, your application for the pandemic unemployment assistance. And then once again, you're approved, you get the unemployment. Plus remember that extra $600 a week until July 31st. I think that brings me to the end. So we will now turn it back over to Jason for questions regarding the FFCRA.
All right. Thank you, Carol. You know, Carol has really done a fantastic job keeping everyone updated and apprised on all the different changes that have come down the road regarding the CARES Act, the Paycheck Protection Program. So we're happy to have her with us today to kind of go through a lot of these details with everyone on the line today. You know, it's interesting, you know, with all the different changes and the focus being on the Small Business Association and the loan process, it's almost as if the FFCRA and the loans involved are old news. And as long as we have this pandemic continuing and employees have this need for the leave benefits that are put in place, then I assure you it's going to remain relevant. But what we wanted to do, much like Carol went through some of these questions and updates as it pertains to the CARES Act and the loan process, we wanted to do the same with the FFCRA. And there were a lot of great questions that came through over the webinar last week that we wanted to review, as well as go over some other relevant information. So one thing that we heard quite a lot about, not just through the webinar last week, but as we speak to different employers and businesses throughout that week, is around posting notices. So just to reiterate what the guidelines specifically are, is employers are required by the DOL to post their notices in a common area conspicuous to employees, and we reviewed how that might be a bit difficult considering that many employees are working remotely these days. So, as such, the Department of Labor did say that a workaround for that would be to directly mail or email the notices to your employees, or you could post it on your website, and that would suffice as the requirement. So that remains the same right now, as does the translation into different languages. So as we mentioned, employers are not required to post the notices, the FFCRA notices, in multiple languages. However, that the Department of Labor is working on translating those notices into different languages, and that again remains a requirement. So interestingly enough, as we do see a lot of these changes come through in the middle of the night, it's no different with these notices, because between last night and this morning, there were changes, or at least additions, to the multiple languages. Right now, the FFCRA fact sheets for employees and employers are available in Spanish. Posting notices for employee rights, as of last night, they were available in Spanish and Korean. Now they are available in a number of other languages, including Chinese. So again, they are continuing to work on this to provide these notices to those who need it in different languages. And then the posting notice for federal employee rights is also available in Spanish. Now, as we mentioned last week, the posting notices can be found on the Prestige website, very easily to download, and again, we're continuing to take these new additions and posting them on our websites, or you can simply go directly to the Department of Labor website where they are listed there as well. So moving on to some questions that came through on the webinar last week, I wanted to take some time to take you through some slides of these questions because they do come up and we feel that they're important to answer for everybody. So first being, can the emergency FMLA provision be taken on an intermittent basis? Definitely something that we spoke about during our webinar last week. Yes, the DOL has confirmed that employees can take both emergency paid sick leave and the emergency FMLA leaves intermittently while teleworking or working remotely. The important takeaway from this is that the employer does have to agree to this setup. It's not just an automatic. Next question that we have here is, if we do shut down our office and furlough all of our employees, do we still have to pay for the emergency paid sick leave and the emergency FMLA? The answer to this one would be simply no. Furloughed employees are not eligible for these benefits. The important takeaway from this one that we did get more clarification on over the last couple of weeks is that regardless of whether an employee is listed as furloughed or laid off, anything within that nature that we really started classifying employees as in the beginning of all this, employees do need to be actively working in order to be eligible for these benefits. So regardless of whether they are classified as active or not, furloughed or not, if they are not actively working, they will not be eligible for these benefits. Next question that came up, this is something that's definitely made the rounds, and we've been getting more and more information on that, and that's around documentation. What are the requirements around documentation for emergency paid sick leave and emergency FMLA? Now, listen, the one thing that we're always going to say is that you always need to document. And for anybody on the phone right now that's ever spoken to an HR business partner at Prestige, I'm sure you're aware of the one question that you probably hear most often from them is, have you documented anything? That is where our power comes from. That's what we have to lean on should we need to refer to something in the future about what we do now. So yes, documentation is always and always should remain the priority going forward. Specific to these two leave benefits, the federally mandated benefits, employees definitely should be giving notice to their employers of the need to take the leave and should be providing supporting documentation for requests for these two federal leaves. I will say that questions 14, 15, and 16 on the Department of Labor website do go into great detail on the topic of documentation. And I guess as it pertains to our guidance around this, what we would really say is to use your discretion here and stay consistent with the application of this to your employees. The whole idea of these leave purposes is to provide this benefit, this new temporary benefit to employees that are affected by COVID-19. And as such, it may be difficult to get documentation right away. And we wouldn't disqualify employees or deny employees the ability to take this because we may not have documentation immediately from them. So again, use your discretion. We do suggest that you provide the leaves if the need arises, and if you can't get documentation right away, then it's something that definitely needs to stay on top of. Because like I mentioned earlier, there could be a scenario in the future where you need to refer back to that documentation, and when you speak to your HRBP, the first thing they're going to ask you is, do you have any documentation? So that's our guidance as it pertains to documentation. Next question clearly comes from someone who is in New York, and they asked, if we are furloughing everyone immediately and closing our offices, do we have to offer our employees the option to take their 5 sick days, and do we have to pay them? Well, our answer to that is that no, you do not have to offer the employees the time off. However, if they do request the time off, we suggest that you give it to them if you can afford it. In your communication to employees when they are, should they be furloughed or laid off, again, we do suggest that you provide employees in this scenario with the communication outlining everything and assuring them that their paid time off balances will be maintained and that they'll be eligible to apply for unemployment without a waiting period. Listen, we understand that what we're going through right now affects not just employees, but obviously employers. So there is a give and take in terms of what we can do and the benefits that we can provide right now. But again, if we can afford to provide them with that time off and they request it, our guidance is that you definitely should be. All right, on the next slide here, these are sort of similar questions, but slightly different enough where I felt like I wanted to go over them twice, especially since this has come up quite a bit as well. Are we required to offer the new mandated 80 hours of sick leave if we already offer 80 hours of sick leave? So I take this to mean, the difference between the mandated FFCRA paid sick leave versus a policy, a company-specific policy that you already have in place. So it's important to understand that these are different policies. They should remain separated. So the answer to this is that yes, you should be offering the mandated 80 hours of sick leave if you already have a 80-hour sick leave policy personal to your employees and your organization. And the mandated policy should be offered first and separately. So the idea here is that the mandated policy was put in place by the government only for related cases to COVID-19. And there's a difference. Your PTO and sick time allotments will remain in place and should be treated as separate time off for employees. As we get into this next question, is PTO different from the new 80 hours of sick leave? And again, yes. You know, your existing PTO policies, whether it be vacation or sick time or personal time policies, they are different from the 80 hours of paid sick leave through the federal mandate, and should be provided to in addition to and separately from those mandates. Again, the federally mandated sick time is only related to absence from work as it pertains to COVID-19. Who pays for emergency paid sick leave and emergency FMLA? Well, the employer does. The employer is going to pay for both of these policies, but as mentioned between last week's webinar and this one, these funds can be reimbursed each pay period through payroll tax credits. Next, if you are using the small business exemption, I'm sorry, I missed one. In the middle we have, is the emergency FMLA administered like traditional FMLA through the employer? So the answer to this would be that all FMLA is administered through the employer, since the emergency FMLA is included in quote unquote all FMLA, then yes, it's certainly going to need to be administered through the employer as well. Next, if you are using the small business exemption, which again is classified as employees under 50 employees, if you qualify for the requirements that we reviewed last week, do you still need to post the notice? The simple answer to this is that if you are exempt from the FFCRA as a small business, then you would be exempt from the posting requirement as well. Moving on to the next slide, we have 3 questions here. In a situation where my office is closed because of the government mandate, do we pay the sick leave automatically without employees requesting it? So what I can tell you is no. The government mandate, again, is separate from the FFCRA allotment of emergency paid sick leave. So the emergency paid sick leave only really gets paid out if an employee is placed under a mandatory or precautionary quarantine or isolation ordered by their physician, by the Department of Health, or a similar type of entity. And this is not the same as government shutdowns or office closures. The next question is an interesting one. Does workers' compensation insurance cover sick leave for COVID-19? With this one, honestly, it really depends. You know, if we have employees that are, in healthcare, if they're a healthcare worker, if they're a first responder that is constantly around everything that's going on right now, then the answer could be yes, and very likely it could be yes. We can draw a direct line to their work and getting sick from that work. For other scenarios with employees, they can certainly try and to submit a workers' compensation claim. It's definitely possible, but the analysis would be very fact-specific. They're going to have to prove and provide documentation and medical documents in order to prove that they caught this virus at work, and that can be a bit more of a challenge. So yes, it depends, and we can go through the process, but for different situations based on what the worker is, whether or not they're a healthcare worker or different. How do the Emergency Paid Sick Leave and Emergency Family Medical Leave Act interact? This is definitely something we went over last week, but again, came up quite a bit. So just to clarify and reiterate, the first 10 days of Emergency Family Medical Leave Act is unpaid. However, employees can use the 80-hour allotment of emergency paid sick leave to fill in that unpaid time. And then after that first 10 days, continue on with emergency FMLA. So how do they interact together? Emergency paid sick leave can be used for the first 10 days and then move on to the remaining 10 weeks of Emergency Family Medical Leave Act. If an employer shuts down their business completely, do they still have to pay the New York State required 40 hours of sick pay once their doors close? So with this scenario, if the intent is to not reopen your business after you shut down, then you may need to pay any owed time off balances to your employees. This is what we would be going through with respect to what your policy states. And since there are no laws in New York or a lot of other states regarding paid time off or vacation time, it is going to go by what your policy states. Now, if you do plan to reopen and are just furloughing your staff for a period of time, you are not required to offer the employees their paid time off allowances. But as we mentioned earlier, if they do request it and you can afford it, we do suggest that you provide it to them. And if an employee is out sick and then tests negative for COVID-19, is that a qualifying category for FMLA? So if they go out sick because they're presumed to have the coronavirus, but then ends up it's not actually the coronavirus, it's something else, do they still qualify for the benefits? So the answer to this is no. Now, an employee can only take, first of all, an employee can only take EFMLA for one reason, and that is to take care of a child with a school or daycare closure due to the COVID-19 pandemic. And again, that's only if they don't have the ability to work remotely or telework. Same thing applies for the paid sick leave. These leaves were put in place specifically for the coronavirus, for COVID-19. If an employee does become sick, and it is possible to have an ailment other than the coronavirus at this time, they would have to fall back on their personal PTO time. That wraps up our questions for the CARES Act, the Paycheck Protection Program, the FFCRA. The participation that we have from our participants with respect to their questions is truly fantastic. We appreciate everybody hopping on the webinar today, and I urge you to keep your questions coming. Hopefully you were able to have a lot of those questions answered through the question and answer period throughout the webinar from our panelists. But again, we're gracious to have the opportunity to have everyone on the webinar to provide those updates. So a few things I just wanted to wrap up is that please continue to use your daily support from your dedicated specialist here at Prestige. That would be your HR business partners, your payroll specialists, benefit specialists, compliance, retirement, you name it. We are here for you. We want to make sure to provide you with as much support as humanly possible. We will continue to send out weekly email updates to everybody. I guess at this point it's probably more than once a week, and we're okay with that. We want to, again, push out as much information and keep you as well informed as we certainly can. Again, take a couple minutes to hop onto our new website. We do have a fantastic COVID-19 resource center on our webpage. You can see the URL on the slide here. There's a lot of information that is updated on a daily basis, multiple times a day. And finally, I do urge everyone to download our new mobile app if they already haven't. They can, within this new mobile app, they can get a direct link to their dedicated support team with Prestige so that they know exactly who to go to for any question. So thank you again, everybody, for your time, and I hope you have a fantastic day.